So here are the pros and cons of this Bitcoin bull. It broke out recently and everyone wants to know how high it's going to go. So there's many metrics I use. One important one is called the net unrealized profit loss formula, or NUPL. And it takes market cap minus realized cap and divides by market cap to calculate this figure. And you can see here on the chart that first of all, the white line is the price of Bitcoin. And then the yellow line is the price of this NUPL indicator. So you can see that whenever the yellow line goes into euphoria and greed, that tends to correspond to a major top in Bitcoin. And this has happened every single time in Bitcoin's price history that goes back to 2011. So right now, the NUPL yellow line is pretty far from the red zone of euphoria and greed. So that suggests that Bitcoin has a further way to run in this Bitcoin bull. Now, that said, we are in the late stage of this cycle, and basically we are in the potentially equivalent of 2013, 17, or 21. And these are years Bitcoin had major climax tops. So if such occurs again, and it's likely we will see this given institutional involvement, we could see Bitcoin as high as $500,000, but only for a brief moment, because climax tops are volatile. And so Bitcoin could easily retrace 1/2 to 2/3 of its gains, and that would bring it back to somewhere between 170 to 250,000, where it would then potentially find lower lows until it forms a long base once again. And you can see that here in this chart. When Bitcoin had this climax top in 2013, it quickly retraced almost 2/3 of its gains, basically within just a few weeks there. It repeated this performance in the 2017 climax top, lost 70% of its gains in a few weeks, and then once again here in 2021, it had a climax top, but it took a little while, and then it finally collapsed more than 50%. So if the same happens this time, you can easily see on this log plot, and this is a price that's plotted logarithmically, it could easily go to 500,000 and then retrace quite sharply. So I would add that this indicator is one of several indicators that I use to call the major tops and bottoms in Bitcoin to within a few weeks since 2013, when I bought my first Bitcoin when it was in the teens. Now, one caveat, major caveat I would say, is the bond market. So if you look at the black swan in the room that's hiding out right now, if you look at bond yields across Japan's 30 and 40-year maturities, they've surged to historic levels. And the 40-year, this is the Japanese 30-year. You can see the dates on this, and it goes back to 2020 here. But Japanese yields have been trending higher, which is generally irregular for this country. And Japan is generally used to near zero rates for decades. So this is a major issue that's percolating now in Japan. And the Japanese debt to GDP ratio, which is a key measure of national debt compared to the size of its economy, is now about 260%. So that makes it worse than any other developed country. And inflation has also returned to Japan, which hit 3.6% in March of this year, and it's been above the Bank of Japan's 2% target for 3 straight years. Now, keep in mind that rising inflation eats away at the value of bond payments, so that makes fixed interest less attractive. And the Bank of Japan will likely raise its inflation forecast at its next policy meeting because food prices are soaring, especially rice, which has doubled year over year, and it had its biggest jump since 1971. So we're talking 54 years. Now, until recently, the Bank of Japan kept yields low through a policy called yield curve control, where it bought large amounts of bonds to cap interest rates. So now it's ending that support, and the Bank of Japan has reduced its bond purchases, and this is called quantitative tightening. So we see a triple threat of rising inflation, political pressure to spend more out of Japanese politicians, and the central bank retreat. And so the Japanese long bonds are getting hit the hardest. And this is also drying up liquidity. So for years, the Bank of Japan owned over half of all Japanese government bonds. And now it's pulling back, so there's no one big enough to fill that gap. And a Bloomberg index tracking bond market volatility indicator, it just passed levels seen during the 2008 global financial crisis. And this is all caused because liquidity has been drying up. So this selling of Japanese bonds is now spilling over into U.S. Treasuries. When Japanese yields rise, then Japanese investors start selling their U.S. Treasuries. And that pushes up U.S. borrowing costs, even though the Fed has not been raising rates, but rather has been lowering them in general. And you can actually see here that if you look at the dates, so this was the COVID situation, and then the Fed printed a ton of money, and this yellow line is global liquidity. And then when it started to tighten, then the yields soared. And what we're seeing recently is that the Fed has generally been loosening monetary policy. So yields have been falling, but the U.S. long bond yields, in this case, this is the 30-year, keep creeping higher despite the lower rates. So U.S. debt is soaring. Interest costs are exploding. Inflation remains sticky, and politicians keep promising more in the way of spending. So this forces the Fed to walk a tightrope between tightening and panic. Now in Japan, if the opposition cuts taxes, then debt grows. If its ruling party spends more, then debt grows even faster. And if the Bank of Japan delays rate hikes again, markets lose even more trust. So when markets stop believing a government can control its debt or inflation, they revolt. And that revolt starts with bonds, which could spill over into stocks and other assets such as Bitcoin. Key dates to watch for would be Japan's upper house election, that's July 20th. And right now, well, in 2 days, we're going to see the Japanese 20-year bond auction between July 17th and 18th. And the real risks to Bitcoin and to stocks from Japanese bond market is likely to manifest around these events. So a shock could trigger selling within days with ongoing volatility as yields remain high and global investors reallocate. And if this happens, I would say it's a buying opportunity in stocks and in Bitcoin, because if you look at the global liquidity chart, it remains firmly in place. So this is going back to 2014, and the green shading is global liquidity. And so you can see most recently, we've had a return of global liquidity, and it's showing that it should continue to trend higher. We also have an M2 chart, which shows that M2 is hitting all-time highs. This is for global M2 money supply growth. So I think that we're going to see more blue sky in Bitcoin and in stocks. But always keep in mind that you need to keep your risk tolerance that suits your trading personality, because we are going to get volatility whether we like it or not.